I think it risks significant fallout for sure. First of all, it's not a tariff. A tariff is something that is used to protect domestic manufacturing. So, not only do we really have not much in the way of domestic manufacturing, this isn't a tariff. This is a sanction that is masquerading as a tariff. And I think honestly that a short-term show of strength versus the long-term consequences, I think the consequences greatly outweigh the benefits. And to me, it's impractical, it's counterproductive. I mean, what happened to diplomacy or strategic alliances or targeted economic sanctions rather than broad economic sanctions? And not only that, when you talk about, the BRICS countries, they are massive, significant suppliers of critical elements that we need: energy, raw materials, rare earths, pharmaceuticals, electronics, and that's you're already seeing Xi Jinping start to limit the amount of rare earths that he will now sell into the United States, or putting a moratorium on it. It will create a trade war. And furthermore, I think, look, the BRICS represent a very significant share of the global economy, as is not only in GDP, but human population and many other metrics. I think it's silly. I think it's the wrong message. I mean, look, he is the master of the deal, so maybe he's starting with a bar much higher and intends on lowering it. But I don't think after the 4 years of really horrible diplomacy and doing all the things that we've done to damage our reputation, as optimistic as the environment is surrounding Trump and what he could do for this country, I think it sends the wrong message and will only double down, I think, these countries' resolve to de-dollarize and to do so in a much more opaque manner. You can see these central banks have been accumulating gold hand over fist, even though they're not reporting it. China, I know you're going to ask me about China saying, well, we're going to start buying it again after a 6-month moratorium, but they haven't taken any time off. The import-export numbers out of Switzerland and the UK betray that rhetoric. And by the same token, 78% of all the silver they're using right now in industry is coming as a byproduct of concentrate. And I've talked on your show about how they're flying all around South America. I've received this in terms of a validation from 2 mining execs who have said, yeah, they're going around South America. They're buying the concentrate and the doré bars at up to twice what the West will pay, disintermediating the marketplace so it's not recorded. It doesn't affect the price, sending it back to China for it to be refined. So they're making efforts to de-dollarize that are less than forthright in terms of reporting gold acquisitions to the IMF. And this will just make them double down not only on their desire to de-dollarize, but in the way that they probably are less than forthright about all sorts of things dollar related, including the acquisition of natural resources.
The world is undergoing a seismic shift, with gold and silver emerging as critical assets in a rapidly evolving economic and geopolitical landscape. The backdrop of economic uncertainty, combined with shifting power dynamics and the relentless erosion of fiat currencies, has positioned precious metals as the ultimate safe haven. Andy Schectman's insights illuminate the pressing need for individuals and nations to reassess their approach to wealth preservation in an era of unprecedented change. Today's financial markets are caught in the grip of the everything bubble, a term used to describe the unprecedented overvaluation of nearly all asset classes. From stocks to real estate, the signs of froth are unmistakable. The Buffett indicator, which measures the total value of the stock market relative to GDP, stands at a staggering 206%, far above its historical average of 85%. This metric alone underscores the extent of the bubble, reflecting an economy increasingly divorced from the fundamentals of production and consumption. Insider activity further corroborates this narrative. High-profile corporate executives are selling their shares at an alarming rate, with figures like Jeff Bezos and Mark Zuckerberg collectively unloading billions of dollars worth of stock. At the same time, individual investors remain euphoric, with a recent survey showing that nearly half believe there's less than a 10% chance of a market crash. This disconnect between insiders and retail investors is a classic warning sign of an impending market correction. In contrast, the precious metals market stands out as a bastion of value. Gold and silver, despite their recent price fluctuations, remain undervalued relative to their historical role as stores of wealth. As Schectman aptly points out, this represents a golden opportunity for savvy investors to position themselves ahead of a likely market correction. Gold and silver are not just financial assets, They are strategic commodities with profound implications for global power dynamics. Their significance is underscored by the actions of central banks, which have been quietly amassing gold reserves at a record pace. In 2022 alone, central banks purchased over 1,000 metric tons of gold, the highest annual total in over 50 years. This trend reflects a growing recognition of gold's enduring value as a hedge against inflation and geopolitical risk. Silver, too, is gaining prominence, not just as a monetary metal, but also as a critical industrial resource. Its applications in renewable energy, electronics, and medical devices make it indispensable in the modern economy. The global transition to green energy, in particular, is driving unprecedented demand for silver, with solar panel production accounting for a significant share of annual consumption. This dual role, both as a store of value and an industrial commodity, makes silver uniquely positioned to benefit from the twin tailwinds of economic uncertainty and technological innovation. For individual investors, the implications of these developments are clear. Gold and silver are not just hedges against inflation, they are safeguards against systemic risk. In a world where currencies are losing value and markets are overvalued, precious metals offer a stable foundation for wealth preservation. Gold's role as a hedge against uncertainty is well established. Its universal acceptance and intrinsic value make it a reliable asset in times of crisis. Silver, with its unique combination of monetary and industrial uses, offers both stability and growth potential. Investing in gold and silver is not just about protecting wealth, it's about participating in a broader shift in the global economic order. As the East rises and the West grapples with its fiscal and monetary challenges, precious metals are poised to play a central role in the financial systems of the future. The writing is on the wall. The global financial system is undergoing a profound transformation, and gold and silver are at the heart of this change. For those who recognize the significance of these trends, the opportunity is immense. The current undervaluation of precious metals, coupled with the structural vulnerabilities of the paper markets, creates a compelling case for investment. As Andy Schectman emphasizes, this is not just a financial decision, it's a strategic one. Owning gold and silver is about more than just returns. It's about securing your future in an uncertain world. The time to act is now.
Everything that's happening with Russia, this is the absolute worst possible message that could be sent. Talking about stationing nuclear warheads in the Ukraine, giving them long-range missiles that are traveling into the heart of Russia, that are American-made, and the technology behind them speaks to American assistance, it's crazy. I mean, it truly is crazy, and it's not just the stupidity in terms of geopolitical. I mean, the first 2 months the last 2 months rather represent, and you're talking October, November, would represent the first 2 months of the 2025 fiscal calendar for the government that Trump is going to inherit. And they spent $584.2 billion in the first 2 months. That is the highest deficit ever in the history of this country for the first 2 months. It's insanity. We didn't spend that kind of money, $584 billion on a deficit, for a whole year until 2009, and now we did it in the first 2 months. The worst start to a year for the U.S. Treasury in the history of this country, and that's the economy that he is going to inherit. So whether you talk about the geopolitical blunders, and it's not him pulling the string, who is continually sending more and more money to the Ukraine, and arms and military assistance, and doing things that are very provocative and provoking. At the same time, spending money like it does not matter. And then the stupidity of selling the border wall for, pennies on the dollar that we paid for. It's like eighth grade tit for tat. You can't make it up. How many millions of their people have died? Their country is in tatters. I mean, literally, I have two friends that are here right now friends of a friend who I've become close with. They're from the Ukraine. They owned a business and they have nothing. And one guy's driving an Uber and the other one is cooking food for a family. They have nothing. So we've destroyed their country. We've helped destroy it with 200 plus billion in aid, most of it in the form of weapons from the military industrial complex. So we enrich the military industrial complex that destroys the country, kills their people, and then BlackRock comes in and rebuilds it, has all the contracts to rebuild it. We have our thumb right on Russia, and then we get to exploit all of their rare earths. It sounds very similar to what we did in Iraq, where 20 years ago we invaded them under false pretenses. We're still there. We're still controlling their natural resources, sanctioning 14 of their banks. At some point, even when you look at what's going on in Syria, it's about oil. There's a pipeline that would have gone through Syria, which would have completely destabilized, and I think it was from Qatar, completely destabilized Russia's stranglehold on the energy to Europe. And instead, Syria said no, so they're taken out. And their country has been devastated, like worse than Iraq. And we, because of our sanctions, they can't even get medical supplies for the children or the women. They can't rebuild their destroyed infrastructure. They're starving to death. And everywhere you look, the U.S. has their fingers in all of this. It's just time to put an end to all of this. And that would be my wish. It would be my wish that Trump would be far less of an interventionist and far more protectionist and bring people home, secure our borders, stop spending all this money, stop meddling in everyone's affairs. And they're putting this on overdrive right now, Elijah. To your point, he's going to inherit quite a mess, not only politically, geopolitically, here at home, socially, morally, the whole 9 yards, spiritually even. The whole thing is just bizarro world. So he can't get here fast enough as far as I'm concerned. And he will not be inheriting such a pristine, vehicle as he might wish. I think he's got a lot of work in front of him.
Silver often plays second fiddle to gold in the world of precious metals, but that narrative is rapidly changing. Andy Schectman highlights a critical point. Silver's unique position as both a monetary and industrial metal places it at the heart of the geopolitical and economic storms brewing today. Unlike gold, which has historically been the go-to asset for wealth preservation, silver's dual utility amplifies its strategic importance. Industrially, silver is indispensable. From solar panels to electric vehicles, from medical devices to military technologies, its applications are growing exponentially. The global push for green energy and technological advancements means silver is not just a monetary asset. It's a cornerstone of the future economy. The demand for silver in industrial applications is expected to outpace supply significantly in the coming years, creating a potential supply squeeze that could send prices soaring. Schectman's observation about China's aggressive acquisition of silver is telling. Chinese entities are buying silver concentrate and doré bars directly from miners, sidestepping traditional markets. This ensures that their acquisitions don't impact global prices, allowing them to stockpile silver at suppressed rates. This strategy, combined with the West's complacency, sets the stage for a significant market disruption. The silver market has been heavily manipulated for years, primarily through the use of paper contracts. The staggering short positions on COMEX, estimated between 700 and 750 million ounces, are a testament to this. Much of this shorting is naked, meaning there's no physical silver backing these positions. This creates a house of cards that could collapse under the weight of increased physical demand. The silver reserves in London and the US are also dwindling at an alarming rate. Schectman notes that the stockpiles at the LBMA and COMEX are being drained methodically. Unlike in previous years, where less than 1% of contracts stood for delivery, we now see a growing trend of physical settlement. This shift is largely driven by countries and entities in the East who are using the West's paper markets to acquire physical silver without triggering a price spike. The question isn't if this manipulation will end, it's when. And when it does, the resulting price correction could be historic. For investors, this represents a rare opportunity to buy silver at artificially low prices before the market adjusts to reflect its true value. The BRICS nations, Brazil, Russia, India, China, and South Africa, are leading the charge in de-dollarization. This shift isn't just about diversifying their reserves. It's about creating a financial system that isn't beholden to U.S. policies. Gold and silver are central to this strategy. Russia and China in particular have been vocal about their dissatisfaction with the dollar-dominated system. By accumulating vast reserves of gold and silver, they're building a foundation for a new monetary order. Schectman highlights that these nations are not only buying metals, but also exploring alternative settlement systems for international trade. The proposed BRICS currency, potentially backed by a basket of commodities including gold, is a clear step in this direction. For the US, this is a wake-up call. The dollar's dominance has allowed the country to run massive deficits and impose its will globally. But this era of unchallenged hegemony is coming to an end. The more the US uses the dollar as a weapon, the more it pushes countries toward alternatives. This is a classic case of the law of unintended consequences. Gold has always been the ultimate hedge against uncertainty. Its unique properties, durability, divisibility, and universal acceptance make it the perfect reserve asset. Central banks around the world are recognizing this, ramping up their gold purchases to prepare for a more volatile future. Schectman emphasizes the strategic nature of these acquisitions. Countries like China and Russia are not only buying gold, but also doing so discreetly. By underreporting their purchases and bypassing traditional markets, they are keeping prices stable while building reserves. This stealth accumulation is a clear indication of their long-term strategy. For individual investors, the lesson is clear. If central banks are prioritizing gold, so should you. Gold isn't just a hedge against inflation, it's a safeguard against systemic risk. With inflation eating away at fiat currencies and geopolitical tensions escalating, the case for gold has never been stronger. For the average investor, the ongoing global shifts might feel distant and abstract. However, their impact is anything but. The erosion of the dollar's purchasing power, the risk of a stock market correction, and the growing uncertainty in global trade all point to one conclusion: the need for financial resilience. Gold and silver provide that resilience. They're not just investments, they're lifelines. Here's why. Inflation hedge. Precious metals preserve purchasing power in the face of rising inflation. Portfolio diversification. Gold and silver are uncorrelated with traditional assets, providing stability during market downturns. Crisis insurance. In times of economic or political instability, precious metals are reliable and liquid. Why now is the time to act? The window of opportunity to buy gold and silver at their current prices is closing. The structural issues in the silver market, the aggressive accumulation by central banks, and the global move away from the dollar all point to a significant revaluation of these metals in the near future. For silver, the combination of industrial demand and monetary significance creates a perfect storm. The same factors apply to gold, albeit in a more traditional sense. Investors who act now stand to benefit not just from price appreciation, but also from the peace of mind that comes with owning assets that hold their value through thick and thin. Here's how you can prepare for what's coming. Accumulate physical metals. Focus on buying physical gold and silver. Coins and bars are excellent options, offering liquidity and security. Diversify your exposure. Consider mining stocks and ETFs as a way to gain additional exposure to the precious metals sector. Stay educated. Keep abreast of market trends and geopolitical developments to adjust your strategy as needed. Think long-term. Precious metals are not a short-term play. View them as a cornerstone of your portfolio for the years ahead. The current economic and geopolitical climate is a wake-up call. The cracks in the global financial system are widening, and the actions of central banks, institutional investors, and sovereign nations underscore the importance of gold and silver as stores of value. Andy Schectman's insights highlight a critical truth. Gold and silver are more than just commodities. They are instruments of resilience and power. As we face an uncertain future, these metals offer not just financial security, but also the opportunity to be on the right side of history. The question isn't whether you should invest in gold and silver, it's how much and how soon. For those who seize this moment, the rewards could be transformative. For those who wait, the cost of inaction could be irreversible. Act wisely and act now.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.